Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome to today's morning blast. Let me try and invite Michael Brown. I'm not sure why that didn't send the first time. It is Thursday, the 15th of May, all day, as usual. Michael and myself will be giving you a review, preview, put a smile on your face, see what happens. He doesn't seem to be connecting. Why is he not connecting and joining me in the call? He's left and he's left me for dead. Do I know any good jokes? Not clean ones. So hopefully he can join quickly as possible. Him and technology do not go together, so this will not be a surprise to many people. Hopefully the invite is sent again, Mr. Brown. Join whenever you're ready.
Good morning, Ryan. Good morning, everyone. Can you
Oh,
hear
he's
me now?
back. He's back. I'm still having you as a listener on here, but no, you're back. But before we crack on,
I was going to say I am here. I was speaking earlier, but I couldn't hear you, and clearly you couldn't hear me.
Oh, I was just enjoying the Beastie Boys, a bit of sabotage in the morning. Before we crack on, let me get the legals out of the way. So, as usual, nothing discussed in this space session constitute trading or investment advice or infers any kind of endorsement by PIQ or indeed myself, Ryan Paisley, and the magnificent Mr. Michael Brown. Good day.
Good
Sorry, do you
morning,
know what?
all.
I said good day. I was actually on a call this morning at 7 a.m. with some Australians. So maybe that's why the good day popped in.
Oh, welcome to my world.
Yeah, no, very much so, very much so. What a world it is. What's
Oh,
been
indeed.
occurring, my dear friend? What has been occurring?
Well, first things first, I'm pleased. I'm sure our regular listeners will be pleased to know that I have restored standards in the city today, fully suited and booted, polished black shoes on. So it's going to be the best morning blast you've ever heard because I am
So,
suitably attired for once.
so what did the old Bill finally get you for?
I was going to say I'm in the Old Bailey at 1:30 this afternoon, and you're coming along as a character witness.
Oh God, help you! I've promised myself I'm never going back in that building. Moving on, moving on.
Oh no! Yeah, we're moving on very swiftly from that and into what happened yesterday. It was a relatively subdued day, to be completely honest with you, across the board. The S&P 500 eked out a gain of just 0.1%. The tech sector continuing to lead the way higher, with the Nasdaq 100 up by about 0.2%. But broadly, as I said, it was a pretty subdued day across the board. We did have some modest selling pressure coming in across a steeper Treasury curve, with the 10 and 30-year yields rising by about 5 basis points apiece, the 10-year climbing north of 4.5% once more. In the foreign exchange complex, it was a choppy day for the dollar, with the greenback down near as makes no difference 1% on an intraday basis before recovering all of those losses into the close. Cable ending the day just below 132.5. The euro pretty much flat at 111.85. We have seen some of those moves pare back in early trade this morning, with a little bit of further dollar weakness beginning to creep in. In terms of the commodity complex, WTI extending losses by another 1% yesterday, and gold sadly is not shining very much at all at the moment. It
Ooh.
seems like the yellow metals salad days may well be over for now, down by about 2.5% yesterday and this morning.
Oh, well done, Mr. Michael Brown.
And this morning trading beneath the 50-day moving average. And of course, the morning blast this morning coming to you from the man with the suit and the tie, as Spandau Ballet famously sung. In terms
Oh
of
God, look, listeners, this is what you get. We've evolved beyond basic punnage. This is now theatre. You're experiencing a master in his trade. Take it in, guys. Take it in. Record these for future prosperity.
Indeed, but if you do use them, then I will insist on royalties. Don't get any
Well,
wrong
good luck with
ideas
that.
about that.
You barely get a lunch out of me.
Well, yeah, that is very true. In terms of fundamental catalysts from yesterday, it was relatively light once again. We certainly had nothing of any note on the data docket yesterday. A few bits and bobs on trade worth just mentioning. The more conciliatory and softer tone between the US and China continuing. China yesterday suspending and scrapping its unreliable entities list on a whole host of US companies, and also suspending the export controls that it had put in place over 28 US entities. Of course, this follows the weekend, effectively a trade truce that was agreed in Geneva between the US and China. And of course, we are now in that 90-day period where the US tariff on Chinese imports has been cut to 30%, and the Chinese tariff on US imports, goods, of course, has been cut to 10%. Sticking with the issue of trade, we did have reporting via Bloomberg sources that the United States and South Korea have apparently been discussing currency policy in talks which took place earlier this month in Milan. According to these Bloomberg sources, the two agreed to share, and I quote here, a mutual understanding of the principles that they hold for operating foreign exchange markets and to continue discussions on FX policy. Now, there were further sources reports later in the day.
I'll tell you what, though, whoever came up with that was getting paid by the word.
Oh, they absolutely were. It's like an essay at university when you've got a word count and just trying to pad it out right
Yeah.
towards the end. The reason I bring this up, because although we did have further sources reports later in the day saying that they didn't explicitly discuss currency valuation, this is nonetheless raising the possibility, at least in my mind and the mind of other market participants, that the Trump administration are going to start to focus a little bit more on foreign exchange in all of these trade negotiations. Of course, we've heard many, many times now that the Trump administration are focusing not only on tariffs, but also what they're calling non-tariff barriers, things
Yeah.
like exchange rates, for instance. And we also know that both President Trump and Treasury Secretary Scott Bessent have on numerous occasions stated their preference for a weaker dollar. So it's going to be something that's very, very interesting to see how this develops. I think a lot of the Asian nations would be prepared to accept some degree of strengthening in their domestic currencies,
Yeah.
probably recognizing that they trade at unfairly cheap levels. I think it's a very, very different story if the United States were to, for example, have that conversation with the European Union. I don't think the EU want the
Yeah.
euro going to 125, for example, just for the sake of a trade deal with the United States. So one worth keeping on the radar. It's certainly a theme that's going to sort
I
of
tell
bubble
you
away
what,
under the surface.
on this, hats off. I think they've played a bit of a blinder here, the US, because it's funny enough. Well, we've mentioned it, and myself and Angie on the Grey Market Blast have mentioned it a couple of times. That Trump's play was obviously inflict maximum pain, so you bring people to the table as quickly as possible. I mean, this doesn't drag out. And what he's then done is like, yes, you're right, you want tariffs reduced as quickly as possible because they're damaging, well, all of us, and we need to get them reduced. But we're only going to do it if it also includes you devaluing you strengthening your currency, allowing us to devalue the dollar a little bit. I think bundling it into the trade negotiations, which need to be resolved ASAP, I think is a little bit of a bit of a blinder, to be very frank with you. Well played.
Indeed. Yes, we will see how that one develops. The other story on trade is this morning, President Trump was giving an incredibly rambling press conference in Qatar, which I won't recap in its
BTC.
entirety. Yeah, exactly. But one of the things he did say was that apparently India have offered to drop all tariffs on the United States. Of course, we also heard from the White House economic advisor Kevin Hassett yesterday, or maybe the day before. He was talking about how there's 20 to 25 deals that are still being negotiated. Very, very familiar rhetoric, but nonetheless, just at the margin worth bearing in mind. In terms of other bits and bobs, we had news out of Europe yesterday, this via sources cited by Reuters. They were saying that the ECB's supervisory arm, they have apparently stepped up their checks on banks' dollar funding. The reason I bring this up is because apparently some of the EU's largest banks have raised concerns with the ECB that there could be unprecedented scenarios of the Fed not providing dollars if they were required. Now, I think this feels a little bit far-fetched to me, to be completely
Yeah,
honest,
smalls.
but nonetheless, it is just a bit of an insight into how the EU are thinking things may develop on the trade and monetary front a little bit more broadly. In terms of overnight, we have had a couple of bits and bobs of economic data out of Australia. Going back to them, we have the latest labour market reports. Employment rose by 89,000 in the month of April, while unemployment held steady at 4.1%. I haven't had a chance to dig into the data, which is a little bit remiss of me, but I do wonder whether the employment number has been boosted by the election. Of course, the Aussies had an election right at the start of May. We saw with the Canadian Canadian jobs report that there was a surge in hiring ahead of their election. So I wonder whether a similar sort of thing has skewed the
So
Aussie data
sorry.
higher.
So who would be hiring ahead of? Why would you be hiring ahead of the election? We're talking about government
Yeah,
hiring,
government hiring, people to man
polling.
polling stations, people
Right,
to
got you,
count
got you, got you.
ballots, all this jazz. So,
Yeah, I'm with
all of
you.
the sort of election administration roles,
All that
effectively.
jizz. Yeah,
Oh God. And if we're going back to economic data, we also had the latest GDP numbers out of the UK this morning. The economy expanding by 0.7% on a quarter-on-quarter basis in the first 3 months of the year. That is the fastest quarterly pace of expansion since the first quarter of 2021, and saw the annual growth rate rise to 1.3% above the expected 1.2%. On the face of it, very, very good data. But to be completely honest with you, it is worth completely ignoring because it does very much flatter the state of the economy. GDP has been skewed to the upside by, firstly, the front running ahead of tariffs imposed by the United States. To put that into a little bit of context, exports in Q1, overall, they rose by 3.5% quarter on quarter. Exports specifically to the US, they rose by 16% quarter on quarter. So it's pretty clear what one of the factors that has pushed that number higher. The second thing that will be positively flattering the GDP metric is that a lot of firms and consumers will have pulled forward activity from
yes,
Q2 into Q1 ahead of things like the national insurance changes, minimum
yes.
wage increases, etc., etc., etc.
But don't let the truth get in the way of a good story, because our politicians certainly won't.
Yes, well, I was just going to get onto that actually, because as if on cue, we have heard from the Chancellor Rachel Reeves this morning, who said that this morning's growth figures, and I quote, show the strength and the potential of the
Yeah,
UK
yeah.
economy. In the first 3 months of the year, the UK economy has grown faster than the US, Canada, France, Italy, and Germany. But I'm not entirely sure how she's come up with that because Canada haven't actually released their Q1 GDP data yet.
Again,
But
don't
we'll
let the
set
truth
that
get
to
in the way
one
of a good
side.
story.
Looking at more timely indicators of economic activity, it is clear that downside risks remain, and the second quarter looks relatively grim. The most recent PMI surveys, for example, showed all the metrics at well over 2-year lows. So I think, to be completely honest with you, that Q1 is probably going to be as good as it gets for a
Um,
while for UK PLC. Were you going to say something else?
yeah, I think you mean below. Well, yeah, rather than above the 2-year lows, I think you mean like below, right? But anyway, I'll tell you one number that came out at the same time as GDP data, which is probably more applicable, is the manufacturing production year-on-year data. Came in at minus 0.8 versus a minus 0.5, which I think is more indicative of the
Hmm.
state of the economy right now.
Yes, I would firmly agree with that. And last but by no means least, from me this morning, our favourite AI firm, who are still in desperate need of a rebrand, Pony AI. They have apparently they have apparently filed confidentially for an IPO in Hong Kong.
And a name change.
It's not very confidential anymore. Their ADRs, which trade in the United States, they jumped about 17% on this filing yesterday. I just wonder what ticker they're going to trade under. Is it going to be PONY, TRAP, CRAP? Who knows?
TURD.
Only time
Look
will
at
tell.
look at me spelling four-letter words like nothing.
But
Michael,
yes, good old Pony AI there. We'll
yeah,
see if people pony
that,
up for that
we
IPO.
do need to, funny enough, we are bringing some AI into PIQ. Maybe I'm gonna have to give them a tap and say, look, yeah, we give you a load of free publicity on the show. Can you give me
Right,
some
and
free AI?
if I'm being honest, you're not one to talk about company branding and names.
Well, moving swiftly on. I don't know what you're on about. I don't know what it's always been called PIQ. It was never once called Career Plus IQ. I promise you. Just don't look into our history. But moving on. Thank
In
you for
any
that, Mr.
sense.
Brown. Thank you for that, Mr. Michael Brown. Anyway, cracking on. Some overnight news headlines from the always awesome overnight news roundup, which is compiled by the equally awesome Zach, who I can see listening in. That's why I'm giving him the big one. Do follow it on Substack, subscribe. It is the best way to get abreast of, oh, look at me saying breast, of all the overnight news headlines you may have missed while you were sleeping. Kicking off at the moment with some trade news. The US and Chinese trade envoys meet at the APEC conference, signaling ongoing trade negotiations. APEC warns of stagnant export growth in Asia Pacific due to US tariffs. Japan's trade negotiator may visit Washington next week for the third round of US talks. Southeast Asian nations face pressures to curb rerouting of Chinese goods in US tariff talks. That's gone to the FT. Lower US tariffs on UK exports has been delayed for weeks, according to British officials. So again, this is another, a bit of negativity, because obviously everyone got a bit excited when we heard UK trade deal. Then we realized that actually it's that famous phrase, broad framework, and there's weeks to go. It looks like there could be now months to go if we're adding these extra weeks on. Shein, the Chinese Temu equivalent, cuts US prices after Trump administration reduces duties on Chinese imports. Rio Tinto, they doubt the US tariffs will boost domestic aluminium production, expects higher prices. In macro news, US to cut banks' capital requirements, reducing supplementary leverage ratio, boosting treasury market. That's according to the FT. Fed's daily says solid economy. Fed's. I'll start again. I've been up since 4 a.m. That's my problem. I'm tired again. Fed's daily says solid economy allows Fed to wait on rate adjustments amid uncertainty. Republicans advance Trump's budget, approving tax cuts and healthcare spending reductions. Sticking with Republicans, their tax plan threatens earlier end to clean energy subsidies. The White House considers a 2-year push or court fight to pass Doge spending cuts. Steve Cohen has estimated a 40% chance of a US recession. That's according to Bloomberg. US
that's
firm.
one for Dario Perkins. That's his little pet peeve at the
It
moment,
is.
isn't it?
It
All
is.
these probabilities of recession.
And you know what? I'm willing to bet that Dario Perkins is one of the anonymous listeners, because he seems to always give me a little nudge, a DM nudge, if I slag him off and I can't see him listening. So, hello, Dario. Hello, Dario, lurking in the shadows. US firms borrow heavily in Europe's debt markets for lower costs and diversification. Chinese corporate bonds rally after PBOC easing, risk premiums hit a record low, according to Bloomberg. Goldman Sachs, they're raising China's growth and MSCI targets post-tariff rollbacks. No shit there, or no surprise there, sorry. Bank of Japan, they're likely to hold rates through September to assess US tariffs impacts. That's according to a Reuters survey. And geopolitical headlines, Iran is signaling a willingness to negotiate with the US for sanctions relief impacting oil prices. There's been a lot of headlines from that this morning, both from Tehran, Press TV, and Trump himself. I did flag Polymarket when I first saw their first headline hit. It was giving a 45% chance of a deal being struck by July. 2-3 headlines later, it's trading up to like 60%. So, one to keep an eye on. If you are a headline junkie like myself and you're using PIQ, if you've got a Polymarket account, there are some trades to be had. Trump and Putin to skip the Russia-Ukraine peace talks. That's according to the latest information we've had. Again, by the time you listen to this, it might be all changed. The Kremlin is apparently sending technocrats instead. Republican lawmakers urge ban on TP-linked router cells over China ties and security concerns. China's Xi encourages Danish firms to strengthen China-European business ties. Philippines and Germany, they're signing a defense deal to boost weapons and cyber security cooperation. There you go. One that I will add to this is last night, if anyone hasn't already noticed it or seen the story, Reuters have had a bit of a coup, where they've discovered, or some investigative journalists have discovered, that some quite vital Chinese machinery that's involved in grid infrastructure has hidden communication devices embedded into it. So one to keep an eye on. It's related to kind of how solar farms then hit the grid and all stuff like this. Already people were mentioning it potentially. Is this related to what happened in Spain where it all went a bit kaput? I don't know, but it's definitely something to keep an eye on, because it's one of those stories that doesn't really matter until it fucking matters. So keep an eye on that one. Equity news finally before I pass back to you. United Health Group faces DOJ probe for possible Medicare fraud. Company denies any notification from the DOJ. Cisco raises annual forecast, expects steady cloud demand for networking equipment. CoreWeave reports 5-fold revenue jump, plans accelerated investment despite margin pressure. Starbucks explores options for China business, including potential stake sale. Dick's Sporting Goods.
There's a brand that doesn't translate across the Atlantic.
No, so Dick's Sporting Goods. I'm going to say that again for those at the back. Dick. Anyway, sorry. deal nears 2.3 billion deal to acquire Foot Locker. Nothing funny about Foot Locker. Carvana CEO files to sell $192 million worth of shares as stocks surge. Geely Automobiles Q1 profits triples on record sales driven by new energy vehicles. Xiaomi EV sales in China decline after a fatal accident and marketing issues. Yeah, it's going to be hard to sell something that does that. Siemens maintains a
Oh,
3 to
for
7.
God's sake.
I'm sorry. I'm a child, you know this. Siemens maintains 3 to 7% sales growth forecast despite Q2 profit beat. And finally, for me, Li-Cycle, the lithium battery recycling unit, they're filing for bankruptcy protection in Canada. But they have
Go on,
secured
go
on the
on.
back of because they have secured a $40 million loan from a bid from Glencore. So you could say they're running out of charge, but Glencore have come to stabilize the market. Look,
Moving on.
the thing is, if it was with anyone else, that'd be a good pun. But it's just you're just
I've
light
set
years
the
ahead
bar
of me.
too high. That's the
You
problem.
do, like earlier on, the Spandau Ballet references. You've dressed a suit and a tie just to get that quote in as well. You know, it's I can't. I why try and compare myself to you? It's just a pleasure to be around you, to be honest.
Indeed, mate. You know, and the
Back to
feeling
you
is
in the
mutual.
studio.
Right, on with today. Oh, I see. Tom Talks Cars is out of bed. Good morning, Thomas.
Morning,
Rare
Tom.
appearance from him. In terms of today, then, actually, a hell of a lot to get through on the economic calendar. Really making up for the lack of data releases that we had yesterday. Throughout the European morning at 10 o'clock, we have the latest industrial production figures out of the eurozone, expected to have risen by 1.8% in March compared to the 1.1% rise that we saw in February. We also get the second estimate of Q1 GDP. That is expected unrevised at 0.4% on a quarter-on-quarter basis. Then moving into the afternoon, we have a data deluge out of the
Ooh.
United States. All of this, unless otherwise stated, coming out at 1:30 London time, 8:30 a.m. on the east coast of the US. Highlighting things will be the April retail sales data. Sales expected to have stagnated, on a month-on-month basis in April, down from the chunky 1.4% rise that we saw in the month of March. Also due are the latest producer price index figures. PPI is seen having risen by 2.5% on an annual basis in April, compared to the 2.7% rise that we saw in March. Of course, we had the cooler than expected CPI data a little bit earlier in the week, and putting CPI and PPI together, you can get a pretty good idea on where the PCE metric, which is, of course, the Fed's preferred inflation gauge, where that metric will
Drink,
fall at
drink.
the indeed, where that metric will fall at the back end of the month. Also out of the States, we have the weekly jobless claims data. Initial claims seen having held steady at 228,000 in the week to the 10th of May, while continuing claims are seen rising marginally to 1.89 million from a prior 1.88 million in the week to the 3rd of May. Note, of course, that neither of the initial nor the continuing claims print coincides with the May non-farm payrolls survey week. Speaking of surveys, we have some manufacturing data from the New York Fed, their Empire Manufacturing Index. That is expected at -8, pretty much unchanged from where it was in April. And we also get the Philly Fed's manufacturing index later on today as well. That's expected to rise to -11.2 from a prior -26.4. That's not all, because we have industrial production out of the States due today as well. This data due at 2:15 in the afternoon London time, and seen having risen by 0.1% on a month-on-month basis in April, compared to the 0.3% decline that we saw in March. In terms of that US data, sort of more broadly, just to put it into a little bit of context, I think markets, and I'm going to steal this from JP Morgan because I think it's quite accurate, markets are in a bit of a state of mind at the moment where good economic data is treated as good news, and bad economic data is simply there to be ignored, because obviously it reflects a time where tariffs were making a complete mess of things, and of course the bulk of those tariffs that skewed the data are no longer in place. Turning to the monetary outlook, I think it's very unlikely that any of the data is going to materially alter the outlook for the FOMC. They are, of course, firmly in a wait and see mode at the moment, standing pat on policy for the foreseeable. But nonetheless, in terms of money market expectations, we do see about a 10% chance of a cut in June, according to the OAS curve when I looked a moment ago. The market fully pricing the next 25 basis point cut for September, with about 53 basis points worth of easing in the curve by the end of the year. Speaking of the Fed, we are due to hear from Fed Chair Powell today. He is due to speak at 20 to 2 London time, 20 to 9 this morning on the east coast of the States. Although before you get too excited, Powell will be making opening remarks on the Fed's framework review at one of the Fed's research conferences. So
Yay!
that is very much going to be one for the purists, and I certainly wouldn't be expecting any comments on the policy outlook. We are also due to hear from the Fed's bar today, as well as the ECB's Cipollone, Elderson, De Guindos, and Villeroy, and also the BOE's uber dovish Dingra will be making remarks this afternoon. And last but by no means least, in terms of earnings today, both before the market open, we hear from Alibaba, which are of course one to watch for any of the Asian equity traders, and Walmart. And I think Walmart is going to be very interesting.
When you say Asian equity trade, you mean people that trade Asian stocks rather than just
Yes, don't do the eyes. And
wow. We got him, everyone. We got him.
And also from Walmart, of course, the largest retailer in the US. So it will be very interesting indeed what they have to say in terms of tariffs, what they have to say in terms of consumer spending, and also the guidance that they may or may not issue. And I think that could have quite a significant impact on sentiment more broadly. That's pretty much it from me for now.
To be honest, I was sitting back waiting for a pun to end on, but no, I'll take it.
No.
You don't want to peak too early. So can't give them too much. Leave them wanting more.
Michael,
thank you so much. I will find out later on why you are suited and booted. There's obviously a reason. Well, stay tuned, listeners. I'll obviously link that to you all. But no, seriously, thank you so much, listeners. Thank you as always for tuning in, especially our regular ones. We really do appreciate you. Unfortunately, no crypto blast today with Cam, but there will be the grey market blast with the glamorous Angie Set, so that I can see listening in. Hey, Angie. And yeah, we will see you all tomorrow. Stay safe, keep it tight. Much love.
See you later.